Hi, welcome to Wealthy Mindset. My name is Oliver. Thanks for watching. I really appreciate it. Hope you're having a great day. In today's video, I'm going to cover the overall stock market in terms of the S&P 500, the Dow Jones, the Nasdaq 100. I'm going to provide fundamentals, analyze the graph. This video is going to be pretty awesome because I'm going to show some significant stuff that I think pretty much almost everybody will think it's helpful. If you hopefully find it helpful, hopefully you like the video. If you do, consider dropping a like. It does help with the channel. Thank you so much for that. And today's April 20th, 2021. So this video is not just going to be for the next couple of weeks or a month. It's actually going to be pretty much covering for the most part in terms of information wise all of 2021, but it'll be more stronger for the next coming up weeks/months. And a quick disclaimer before I begin, I'm not a financial advisor. I'm not a professional. And everything I do share with you is just my opinion. It is not advice. So please do not buy or sell based off of information I give you or the opinions I do form. Please do your own due diligence and research before buying and selling. Okay, so this is going to be the overall structure of the video. First, I'm going to start off with the graphs in terms of the high level for the Nasdaq 100, the Dow Jones, the S&P 500. Then I'm going to jump into the fundamentals, and then I'm going to come back to the graphs and go more in depth in terms of analysis. Now, in terms of high level, I'm going to explain why overall I'm bullish for the market for, in essence, the short to long term, essentially long term, but like the next year or so. And then I'm going to explain why the next couple of weeks, potentially month, we might be having a little bit of a correction. In terms of correction, I know it's usually about 10%. That is in somewhat play, but I'm expecting like a 5% pullback. If we look at the Nasdaq 100 right now, covering the tech sector for the most part, has a channel dating back since 2009. So right here, if you look at it, this is 2008, 2009 housing bubble, went down. Once it got back up, it formed a channel dating back since 2009. So right here is 2009 and right here is 2010. So went up to the upside, upward trend resistance line right here. And then here's a downward trend or upward trend support line as well. So went up to the resistance, came back down, knocked down on support, went back up to resistance, came back down on support, resistance, almost support, but not really, resistance, support, or non-resistance, but well, technically there would be a middle resistance, but either way, down to support, went up to resistance, and then support. There is a couple of false breakouts here and there at times too, by the way, so keep that in mind. And then went up to the upside resistance, and then came back down. So technically, if you zoom in here, there was support as well, but there's a couple of false breakouts. If I try to figure out, like in terms of the drops for the false breakouts, I could have done it, but I just want to show the main focus was a channel. Now, the thing is though, even though we've had false breakouts in the past, like right here, there's no false breakouts, but there's a false breakout right here to the upside. Like if I zoom in, you can see a false breakout, but it came back down and then bounced off or back tested as resistance and got knocked down even lower. The thing is though, given that we actually passed the upward trend resistance line, I'm bullish because once you pass like a massive resistance line for quite a while, the run up could be good for quite a while as well. Now, we might be heading down a little bit, but I'll explain more and I'll get back to this. But right now, this is the reason why I'm bullish overall in the market for essentially like the long term. But I'll explain why we might have a pullback later on when I get back to it. I just want to show the significant stuff. So next significant thing is for the S&P 500. Here's the housing bubble right here, 2008, 2009. So in 2008, actually, for the S&P 500, it touched the support level. So here's resistance, here's support, and then here's a second support level. So this is a bigger channel overall. And bounced off support, unfortunately went lower to another support level, then went back up, almost touched support, but not really. Went on resistance, came down, went back up to resistance, came down on support, went up to resistance, came down on support, went up to this level of resistance I'm going to explain, came down on support, broke it, false breakout, went up, resistance level here, came down, support, went back up. Now, I'm going to zoom in just a little bit. Actually, I'll get back to it, but the S&P 500, technically the run is not there yet because the massive run I would be expecting is once we pass this upward trend support line right here. We haven't done that yet. We're actually getting caught on this upward trend support line right here that dates back since 2015. Touch point or back tested in 2018 as well. So I'm going to explain more. You can see a little bit of curve down right here, but I'll get back to it. I'll elaborate more, so on and so forth. Now for the Dow Jones, we have an upward trend resistance line that you can see right here dates back since the 2000 dot-com bubble, more specifically 1999. So 1999, you could see the upward trend resistance level right here, back tested, then passed it at the peak of the 2000 dot-com bubble. Unfortunately, it was a false breakout, and then did not meet the upward trend resistance line until 2018 right here. Back tested it, then just before the pandemic, back tested it again, came down because of the pandemic, V-shaped recovery, formed an upward trend support line right here. So you can see first touch point right here, the bottom of the pandemic, second touch point right here in October 2020, third touch point right here might be a little bit difficult, but it's in January 25th or January 2021 in general, and then went up to the upside. Now we broke the upward trend support resistance line, and this is why I'm also bullish though, is we broke it and then bounced off it as a resistance or support. Sorry about that. So broke above it, tried to bounce off it as support, didn't necessarily do it, and then came down, broke it, but relied on the upward trend support line, so that was good. Went up to the upside. I can't delete these lines, by the way. This might look a little bit confusing. Hopefully you could see this, so just follow this. The reason why I'm not deleting them is because it takes quite a while to draw them, because I'm going to get back into them and explain a couple more channels that's forming right now, because there's a channel happening here, which I'll show soon. But either way, came down, broke through the upward trend support line, which is going to be a little bit difficult to see, but broke it, but bounced off on the upward trend resistance line dating back since the dot-com bubble in 1999. So that's good. Went up to the upside, went back up above the support line, so that's another plus. And now we're still technically above it. MACD line's in the positive. So overall, that makes me bullish for the long run, but there's potentially a little bit of a correction again that I'm going to go through. Okay, so the reason why I'm overall bullish for the stock market is because, for example, the first fundamental is given the chip shortage. The chip shortage indicates that there's more demand than anticipated in the overall sense of consumers, like consumer electronics, I would say. So just because those chips do go into like automotive industry, other industries, so it's not directly electronics that some people might expect, but anything that requires chips for the most part in terms of high level stuff, but not necessarily high level, but relatively speaking. So then that's the first thing. Second thing is, in terms of, for example, more fundamentals, United States bankruptcies, they're actually relatively low. So if I go even further, 10 years, they're actually not all-time lows, because there are times that are even lower. If I show here, it dipped lower in 2006 possibly, but not as low as 2006, but bankruptcy is relatively low. But given, obviously, in terms of like support, in terms of stimulus and all that stuff, et cetera, et cetera. Second thing is, in terms of fundamentals, if we look at corporate profits, now this is usually a pretty good indicator, I would say, but just before the pandemic, we actually, in terms of profits as of recently, so 2020 or end of 2020, it surpassed profits before pre-pandemic. So right here is the pandemic time. We just dropped during the pandemic, and then within the pandemic as well, but we spiked back up at the end. And now, yes, we dipped a little bit lower, but that's not a big deal, because you could see there's cycles that where there's times it dips lower, but it's not really a massive concern. So there's that. Now, next fundamental, interest rates are low. I highly encourage you to watch my interest rate video. That it shows, in that video, I show potentially why interest rates won't be increased until year 2023, potentially 2024, but I'm expecting or anticipating 2023. Now, the reason why 0% interest rates, even though it's at 0.25% basis points, which is relatively close to zero, is significant for the overall market is this is free money that companies could essentially borrow and then put into their research and development and then grow their companies in terms of earnings, like receive more earnings and all that stuff. And then when that happens, their price to earnings ratios technically drop lower because their earnings are going higher. So that then makes it more attractive investments overall in terms of stocks. Now, when they can't invest, when they can't increase their earnings and stuff like that, price to earnings ratio actually goes up higher. So then they become not as attractive investments. That's the thing. Okay, so now another fundamental is the unemployment numbers. They're still dropping. So this is still a good direction in terms of like the bullish viewpoint, in terms of optimistic viewpoint for the market. So yes, it's not as low as it was before pandemic, but it's still dropping 6% as of March 2021. So given all those fundamentals, this is the reason why I'm pretty much optimistic for the overall market and bullish. Also, another thing is too, given that naturally right now people are saving more money just because, for example, you're not going out to restaurants as much as pre-pandemic, not going out for entertainment purposes like seeing movies and all that stuff as much as pre-pandemic. You're not spending gas going back and forth. Probably downsize the number of vehicles. You probably didn't need like 3 or 2 vehicles in a family. Now you need 2 or 1 vehicles in a family now, just because you might not need to go back and forth to work, etc., etc. So given that, naturally how much people are saving potentially, once everything rolls back into sort of normal sense before pandemic's sake, like in terms of the way it was, then that will be more of an economic ball rolling in terms of corporate profits even going up even higher and all that stuff. So restaurants will start making more money again. Entertainment purposes in terms of movies and all that stuff will start making more money again. So that's another outlook for a bullish sense in terms of the hypothetically long-term, short-term future once everything starts opening up again fully. Okay, so now back to the graphs. In terms of showing the short-term correction that I'm going to be elaborating on, I'm anticipating potentially a 5% drop. I know usually a correction is about 10%, but it could be massive, or like not massive, but it could be a full 10%. But I'm just showing why I think potentially it could be first 5% drop. After that, we would have to reassess it. But for this S&P 500 right now, hopefully you could see this upward trend support line right here. Quite a bit of touch points as well. There's this touch point I would like hopefully you could see and most likely focus on, and then this one as well, and then this support level right about here as well. Then there's this upward trend resistance line as well that right here in 2015, by the way, this is 2015, knocked us down, and then resistance in 2018 knocked us down, and then as of April 2021 knocked us down as well. So the significance of it is when we get knocked down by the resistance level, go to the support level, pretty massive drop. Same thing in 2018, resistance level, pretty massive drop to support level. So if you think the pattern's hypothetically going to continue, then we bounced off the support level, went to resistance level. By the way, these lines are a little bit rough. I apologize for that. But if you think that's going to carry through, then you're essentially thinking you're going to drop on the support level again, just like we did in 2018 and 2015. And if that's the case, essentially dropping pretty close to somewhere in the mid 3,940 points, 3,930 points, somewhere around there. Potentially maybe even 3,000, depending on when you drop though, because if you drop later on, the lowest you could go gets even higher. So the lows, you get higher lows, if that makes sense. So, but if you drop right away, you would look at basically again mid/low 3,900 points. Now, yes, there is support levels coming all the way down. The only thing is though, I don't want to make this video too long, so I'm not going to go through all of it. One indication that we could potentially drop lower is because the MACD line for the 1-year chart, this is 1-year chart, is in the negative. You can see right here. Now, if you're new to the channel, MACD line is more of like the moving average in terms of the essentially stock, but this is for the market in terms of direction, in terms of is it a bullish movement, is it a bearish movement. So right now it is bearish, so it's not optimistic, so I could see a drop coming down. Now the reason why I have additional lines right here is if you look at this, I know it's not the greatest channel, but it is somewhat of a channel. So dating back since September 20, you can see a resistance right here, upward trend resistance line, back tested a bunch of times, so multiple touch points, not just one. We had a false breakout, bounced off as support, but ended up coming back down anyway underneath it, back tested and got knocked down. Now there's this upward trend support line right here, dating back since November 2020, and you could just see went up, kept on bouncing on support. Now the thing is though, hopefully before it drops down to the 3,900 mid-range, give or take, low/mid-range, then I'm hoping, hopefully, again, nobody knows for sure, take everything with a grain of salt. Instead of doing this and coming down to this support level that I mentioned earlier, I'm hoping it comes down to this support level because it almost would confirm more of a bullish movement to the upside. And because, for example, the Dow Jones has more of a bullish viewpoint. The Nasdaq 100, the tech sector, has more of a bullish viewpoint. The S&P 500 does not have necessarily yet a full bullish viewpoint. That's the problem. So if it could bounce on this upward trend resistance line right here and then go to the upside, I would be more confident it's going to break this upward trend resistance line dating back since 2009, 2008 housing bubble. So if that's the case and bounces off this, you're looking bouncing off pretty much for the most part, depending on when you hit it, at the mid 4,000 price point. So what I mean by that, 4,050, 4,040, somewhere around there. So hopefully that's the case. Again, 4,050, 4,040, somewhere around there, pretty much almost a full 100 points drop. Hopefully that happens. Can we go lower? Yes, nothing's guaranteed, but we'll see. In the meantime, or we could come back down to this upward trend support line as well. If that's the case, I'm just eyeballing it right now. That would be lower than 3,900 points, essentially 3,870 points, give or take. Okay, so now looking at the Nasdaq 100, which is in essence tech stocks, has an upward trend resistance line that I've showed basically earlier from 2008, 2009. Broke it. This is why I'm extremely bullish overall. But the problem is, in terms of the like short term, next couple of weeks, potentially month, we could be heading back down, especially since, like, for example, here's the upward trend support line right here. Hopefully you could see it with multiple touch points. Upward trend resistance line with a bunch of touch points as well. Not just resistance, but as well support. We had false breakouts to the upside. Even though we broke up to the upside with support bouncing off it as support right here as well, we just came back down underneath it, unfortunately. So given the MACD line is coming back down, still in the positive, so it could still bounce back up to the upside, but I think it's probably going to head back down. Now, if it heads back down, how low will we go? Well, there's this like middle range right here with this red line, and if it comes down, I don't think necessary. So if it comes down to this line, and you can see like touch points and all that stuff, if it comes down to this line, technically it'll hit somewhere in the low 12,900 points. But I think what might happen is it might bounce back up on the clean 13,000 potentially. But again, nobody knows for sure. If you want like a more clear confirmation, it would be in the low 12,900 points, somewhere around there, 12,942 points, so on and so forth. Can it go lower than that and get back down to this support level? So essentially like this, just to make sure like that it's clear, and then go to the upside like that. So on this upward trend support level, yeah, for sure it can. And if that's the case, you're looking at basically 12,170 points range, give or take. So we'll see. I'll keep you updated as we go, but that's essentially what could potentially happen. But I think overall we're still good for the, like, in terms of long term. It's just in the meantime we're potentially in this channel that we could probably drop lower given the MACD line. Okay, so now looking at the Dow Jones. The Dow Jones is a little bit different because it covers only 30 stocks, and it's like the 30 biggest stocks in essence. But we have an upward trend support or channel going, like, happening here with an upward trend resistance line right here. You could just see, and it dates back since January 2021 as well, but kept us down right here, kept us down right here. Upward trend support line right here. Yes, there's a couple false breakouts, but in essence, I just want to show, if you could follow my cursor, got knocked down by resistance, support right here, bounced up to resistance, and again with the false breakup and support, and then resistance mid-range right here. Now, overall, the reason why this one's technically a little bit different for the Dow Jones is because it covers like the 30 top biggest companies overall, and because of that, given the MACD line, there's a chance that it might just go back up. Now, it came down right now. It could go lower to, for example, right now, we close at 33,821 points as of April 20th, 2021. But we could technically drop to 33,444 points, give or take that range. Not exactly that price point in terms of points, but that range in essence. We could bounce off the MACD line, so on and so forth. But I think we might be going at least up to 34,354 points, give or take. Now, can it get knocked back down? Yeah, it could, just because let's just say if we do see somewhat of a correction in the market, then we could probably get knocked back down to this upward trend support level right here and then go back up to the upside again, because I think it's just going to be a small correction for the overall market. So the Dow Jones is not necessarily affected that much, but it could be affected. Again, if it goes down, anticipating it to bounce back up to the upside if it does go down. So the overall movement is a little bit mixed within the markets. Dow Jones is going to go a little bit different. Maybe it might get knocked down as well, like I mentioned, but it's not necessarily following the overall market because it is the top 30 companies. Now, if you think it's going to continue to the upside, so almost move away from the market hypothetically, because it has done it here and there sometimes, is it would just go up and bounce on this upward trend resistance line and then come back down. If you think it's going to hit that between 34,700 points, somewhere around there, and then it would come back down. But it depends on when it meets it. It could hit it, if it hits it soon, then it would be like a lower point. If it hits it later, then it would be like a higher high. Alright, so that's it for the video. Thanks for watching. I really appreciate it. Hopefully you found it helpful. Hopefully you liked it. If you did, consider dropping a like. If you have any questions, do not hesitate to ask. I'll try to answer them as soon as possible. And if you like videos like this or other stock videos or other financial videos I'll be posting in the future, consider subscribing so you'll be notified when I do upload those videos. And that's basically it. Thanks again for watching, and I'll see you in the next video. Peace.